Well, the December CPI print showed prices rising more than expected to end 2023. So what does this report mean for the Fed as their first meeting of the year comes up in a few weeks? Joining me now is Yahoo Finance's Jennifer Schonberger with all that for you. Hey, Jennifer.
Good morning, Michelle. It's great to see you. That latest reading on CPI likely to dash Wall Street's hopes that the Federal Reserve could start cutting rates anytime soon. Excluding the volatile food and energy components of this morning's CPI, the Fed's preferred way of looking at this inflation measure clocked in at 3.9%, a hair above expectations of 3.8%. And while it shows continued moderation in prices, there's still much progress that needs to be seen as the number is still nearly double the Fed's 2% inflation target. And there was progress, though, I want to point out, in a key measure of the report that the Fed scrutinizes. That is the inflation measure of services less housing. That grew at 3.4% in December, down a hair from 3.5% in November. And if we look at shelter itself, that actually grew at a slower pace of 6.2% versus 6.5% in November. So while the Fed is encouraged by progress on inflation and all of its components, they really need to see inflation continue to move down on a sustained basis before they can turn to consider cutting rates. And that is exactly what we heard from New York Fed President John Williams yesterday. He said, quote, "I expect we will need to maintain a restrictive stance of policy for some time to fully achieve our goals, and it will only be appropriate to dial back the degree of policy restraint when we are confident that inflation is moving toward 2% on a sustained basis." Still, Wall Street hopeful, pricing in odds of better than 60% chance that the Fed will begin cutting rates in March. Of course, officials have priced in about 3 rate cuts this year, but no sense of timing on that. In fact, many officials pushing back on sooner. They're thinking more later at this point. Rochelle?
Certainly some water getting thrown on the momentum that markets had priced in there. Jennifer Schonberger, thank you so much.